Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Let's get across what happened overnight. Wall Street finishing firmly higher, though those gains were anything but broad, with the S&P adding around 0.7%, the Nasdaq up almost 1.6%, the Dow also high but more muted there. It was a tech-driven rally with 10 of the 11 S&P sectors finishing in the red. Consumer staples, energy and industrials, the laggards there. But as I mentioned there, the lift focused on tech with those particularly coming from AI earnings. Nvidia shares, they surged almost 9% after another earnings beat, with the company forecasting AI-driven revenue growth of 70% next year. And that single result set the tone for the session. Salesforce and CrowdStrike both caught that wave on strong results of their own, up more than 20%. Other notable movers there included Microsoft, while Amazon shares remain under pressure. Well, markets are awaiting Fed Chair Kevin Warsh's speech tonight at Jackson Hole Symposium. That's his first address as chair, and the market wants clarity on how the Fed handles sticky inflation. This as FOMC members warned of stubborn inflation. FOMC member Beth Hammock saying, "I think it's appropriate for us to put some restraint there to help bring inflation back down to target. The longer inflation stays above our objective, the harder it will be for us to bring it back down." Well, the US 2-year Treasury yield rose to 4.23%. The 10-year was up to 4.67. The Australian 3-year government bond yield futures rose to 4.69. The 10-year is at 5.12. Markets pricing in a 55% chance the RBA cash rate will be hiked at the next meeting at the end of September. 100% chance by November. The US dollar index unchanged. The Aussie, it is currently trading at 71.9 US cents. Should also note that gold was higher, as was Brent crude. Now let's catch up with those market moves. John Blake is joining us from Zacks Investment Research. John, welcome back to you. Let's begin then with that key Nvidia result. Was much anticipated, of course. It just continues to beat report after report.
Andrew, I put it in the context of the overall S&P 500 earnings that we track. We have 27% annual growth for 2026, but next year it's going to be 15 or 16% annual growth. So, the question is, when you have this type of situation where a few big companies are making extraordinary revenues from financing that they are doing of their own equipment, and you have a cycle that looks like it's going to roll over next year, still be strong growth, but not like this. You have to ask yourself, whether where the top is in, or whether we're in the top, or we're 2 or 3 months beyond it, because the estimate revisions are going to start to come down, and that's generally the case here. So, when you're financing your own equipment purchases, I do think it's fair to call that in. And the CFO on the call with Nvidia, the Nvidia CFO said, reference, we don't think this is just circular financing. If the CFO is talking about it, Andrew, you should worry about it.
All right. Well, to that point then, John, then how would you position yourself, particularly with that AI trade?
Andrew, we're in this late cycle rotation. We have a 14% annual return for the Nasdaq and 11.5% for the Dow and 12 or 13% for the S&P 500. So what's happening here is, since late May, the Nasdaq has gone basically completely sideways, and the Dow and the S&P 500 are seeing the rotation of people taking their profits out of those AI names and putting them into these other parts, either ETFs or other names that are less, overvalued. So we're in a very light cycle stage. You're probably going to get some pickup of people cashing out and putting profits to work for the next few months in Dow names and in broader S&P 500 names.
John, meanwhile, let's turn to what's going on in the macro, and ahead of that key Jackson Hole Symposium, anticipation of what Kevin Warsh is going to say, if anything, because he's clearly disappointed the market in the past by any lack of guidance there. But as I just mentioned there, we do have 2 or 3 FOMC members who are concerned clearly about where inflation is sitting at the moment. And we did get, you got that read there on that US core PCE data. What did you make of that? And what are you anticipating, particularly from Kevin Warsh?
Well, look, I mean, we have a 3.5% core PCE rate or something thereabouts, bouncing around a bit, but that is way above target for the Federal Reserve System of the United States. And you referenced that, the RBA is going to raise and hike. They're leading the hiking cycle. And frankly, we're way behind the curve, and we should be where the RBA is. So what the dissenting members of the FOMC, when you have a silent Fed chair, are telling you what's going to happen. And that is there's going to be a hawkish bent to this FOMC meeting here. And it's very likely that we're going to get a hike out of it. And so then get to Kevin Warsh's speech on Friday, Mr. Opaque and Mr. Believing the market's going to work itself out. He's either going to give a real clunker of a speech and hand over more power to the Treasury Secretary, which I think is going to happen, or he's going to step up finally and admit that he owns some of this credibility problem the Fed has, because it's his credibility problem. It's not the Fed's problem, it's his credibility problem. So, right now we've got, two dependent finance executives for the United States, the Treasury Secretary and the central bank chair, and nobody's believing them. They're going to believe in the rest of the FOMC, and they're going to basically see what comes out of this meeting in a couple of weeks.
Well, just on that front then, John, excuse me, what have you made of those efforts from Treasury Secretary Besson to tackle those yields at the long end? It was brief in terms of the reaction, but is the market likely to continue to push back?
Oh, absolutely. I mean, the bond market is a multi-trillion-dollar market, and even the Treasury Secretary of the United States cannot be, beating back the bond movement of these giant bond markets. It's silly to try. I think what's happening here is Bessent's going to meetings with Trump. Trump's saying doing something, and there's a performative action on Bessent saying, I did what you told me to do, and I went out and tried to manipulate the markets. And, we saw this with Bitcoin. How did Bitcoin go from 63,000 to 78,000? Was it a bid on some type of movement of Treasury money, or people the Treasury telling to move money? You can't take that away out of hand with this administration. They're a gambling administration that are putting their own money to work. So my view is Bessent went to a meeting, he got told to do something, and he did a performative action for the Treasury.
Right. Well, fascinating to see then what we hear from Kevin Warsh. John, let's move to your three stocks in focus. Now, the first one is in the energy sector, Valero. What are you liking about this?
Valero is amazing, Andrew. We've got this stock down at $130 a share back last year at this time. Now it's at $350 a share with a $400 price target. And Andrew, what's crazy about that is an 8.5 forward PE ratio. We're looking at $40 a share in earnings for a company like this, with a 350 share price. What's the story here, Andrew, is the manipulation of the energy markets. WTI, the benchmark, Texas oil mark up here is $84 a barrel. That's not dramatic at all. We've been here before. But the refinery margins downstream that are not able to be manipulated through the futures trading are showing you that there's immense profit margins and a lot of structural scarcity in refined product, and that the people are reaping the benefits of these independent refiners like Valero. So, here we've got a stock that looks like an AI stock, even though it's basically an old school oil refiner.
Second one, Lumentum. So this is an optical laser company?
Yeah, so this ties into Nvidia. Jensen Huang, anytime Jensen Huang calls out a stock or a group of stocks, it explodes. So this stock was down below $80 a share. You're going to pick it up now for $950 a share, with a target price of basically above that. So incredible run, because it's in this optical equipment space for data centers in the cloud, which are going to be the big putting in all these servers and all these chips that Nvidia has. So you've got to communicate with those chips, and they carry a ton of data, and they're going to do it optically. So this is the play. But the problem is, you get a double top in the chart with Lumentum. Again, the high was in back in 2-3 months ago. It tanked for a while. Now we're seeing a counter trend rally. This is very typical of 2000, where you get these giant counter trend rallies. they top out and they roll over, and we go up and down, in giant counter trend rallies for 12, 18 months. So in my mind, unless we get a new high out of momentum here, it's telling us the top's in on these fast-moving smaller cap IEI names.
And thirdly, John, look, certainly energy and power remain a focus as far as the AI build-out is concerned. Where does that bring in monolithic power systems?
Well, you called it out, Andrew. This is a fabulous chip company that makes power solutions for data centers. So this is just another one of these Jensen Huang calls where you say, we need all the power in the world. We need the best equipment to go with my chips. And the problem, Andrew, here again, we're talking about a $1,300 stock, which was $600 before Jensen Huang started to pump the stock up. So the problem here, Andrew, what we're talking about is chips, power systems, and optical equipment for data centers. We're not talking about the elephant in the room, which is AI, generative AI. And generative AI is not booming. And we're not talking about that because that's not profitable and we're not seeing any real traction there. So this is the problem. The market's jumped into the equipment story just like 2000, and it's passed on the demand story, which is generative AI, and where is it, and how are we going to make it profitable? And that should be the lesson from these three stocks. The market's already into the equipment game, and that's sort of the Cisco story of 2000.
John, always great to get across your perspective, what you're seeing at the moment. Thanks for joining us from Zacks Investment Research.
You bet, Andrew.
Let's turn our attention to the local market ahead of the open on this Friday then. Having been sold off heavily yesterday, that's particularly on the concern about where interest rates are going to go from here. We are expecting a modestly higher open. SPI futures up just over 0.1%. And of course, the earnings results continuing today. We'll get across that and much more. Join us for the open.